Coca-Cola announced quarterly earnings that exceeded analysts' estimates on Monday, as consumers drank more of its name brand soda, Powerade, and Costa coffee. Despite the successful quarter, CEO James Quincey told CNBC's Sarah Eisen that there are storm clouds on the horizon. During the first quarter, the company largely survived inflationary pressures and maintained its outlook. In pre-market trade, Coca-Cola shares jumped 2%. Here's how the company's results compared to what Wall Street expected, according to a Refinitiv poll of analysts. Earnings per share: 64 cents adjusted, compared to the expected 58 cents. Revenue: $10.5 billion, compared to $9.83 billion predicted. Coke reported a net income attributable to shareholders of $2.78 billion, or 64 cents per share, up from $2.25 billion, or 52 cents per share, in the prior year's first quarter. Excluding items, the beverage giant earned 64 cents per share, exceeding the 58 cents per share predicted by Refinitiv analysts polled. Net sales increased by 16% to $10.5 billion, exceeding Wall Street's forecast of $9.83 billion. Organic revenue, which excludes the impact of acquisitions and divestitures, increased 18% in the third quarter. Pricing and mix, which includes price increases across its portfolio, increased by 7% in the quarter, supported by tactics such as bottling its drinks in smaller packaging. As inflation puts pressure on Coke's profit margins and customers' wallets, the corporation has said it has expanded its array of single-serving offers at affordable rates. Many food and beverage industries focused on bulk packaging due to high demand and shopping trends, but smaller packaging has reappeared in recent months. Consumers, according to Quincey, will not swallow inflation indefinitely. Key components such as high fructose corn syrup, plastic, and aluminum are becoming more expensive for the corporation. Quincey stated on the company's earnings conference call that Coke is attempting to invest in its brands in order to get consumers to pay more for its products. He went on to say that raising prices now is preferable to trying to raise them later in a recession, when people are more price sensitive. "We're going to err on the side of accepting the price hike," Quincey said on the conference call. During the third quarter, Coke's unit case volume increased by 8%. Both the nutrition, juice, dairy, and plant-based beverages category in the hydration, sports, coffee, and tea segment experienced double-digit volume growth. The volume of the company's bubbling soft drink unit increased by 7%, boosted by demand for its brand soda and its zero-sugar variant. Coke stopped business in Russia in early March, citing the Kremlin's invasion of Ukraine. According to the corporation, the decision is projected to reduce unit case volume by 1% and revenue and operating income by 1% to 2%. Coke also expects the move to reduce comparable earnings by 4 cents a share. "We are keeping a close eye on the spillover effects of the war in Ukraine on consumer health, and we remain ready to pivot and react," Quincey said during the company's earnings call. Despite the suspension of its Russian operations, the company reiterated its full-year sales growth forecast of 7% to 8% and comparable earnings per share growth of 5% to 6%. Coke anticipates a 4% headwind from foreign currency in the second quarter.
Thanks for watching. Please subscribe and press the bell icon to get a notification. Business Snap. Finance and investing updates.